Hello traders and welcome to another video review. Today is Monday, 28th of November 2022, the beginning of the new trading week. This is going to be the last week of the month of November, and of course the month is ending on Wednesday as well. So pretty much a very interesting week for those of you who trade this kind of event. So what is going on here today? If you take a look at the Forex calendar, you can see that there are only two important events. One is already done. Retail sales from Australia had been published overnight, and they disappointed the market participants big time. Minus 0.2% is the actual reading. The forecast was 0.5%. The previous reading was 0.6%. So big disappointment from the Australia. And that's it. During the London and New York session, there isn't many of the important data release. We got only one speech from the ECB President Christine Lagarde. This speech will be delivered at 4 p.m. No more very important events on Monday. So let's switch to the technical part and let's do the analysis of the majors at the beginning of the new trading week. First, we are going to start with the Australian dollar because some data had been published overnight. As you can see, this is daily time frame chart of the Australian dollar. We can easily see that the target level, which was projected at 6,837, has not been hit yet. The last week high was made somewhere around 6,800, so only 37 pips miss. However, it's very clear that the market participants are first trying to break above this long-term trend line market in orange on my chart. Their first attempt was a failure. We had a slight pullback, then 3-day rally. We closed above the trend line, but the very next day we got like a kind of a pin bar here, kind of an indecision day, and new week had started today. So we have a gap down on the Australian dollar, which is of course very bearish sign. The momentum is still positive, not that very strong because it's only 57 points. However, it's still positive. It's still above the level of 50, so the outlook is still bullish. But first we need to see what will happen when the bulls, if and when the bulls will close the gap. The low of the gap is located at the level of 6,723. So pretty nice setup on the Australian dollar. The target level is still in play, and of course the supply zone located between the levels of 6,831, 6,854 is still in play as well. So that's the Australian dollar. Let's switch to the majors. Euro dollar goes first. What is going on the euro dollar? We recently made the wave 4 to the downside, and the market participants have been trying to develop the wave 5 to the upside. As you can see, we got this target here located at around the level of 1.0623. That's the perfect Fibonacci based target for the wave 5, and that in the same time this is the target for the wave A of the overall corrective cycle to the upside. Of course, we are still waiting for this wave to be done. However, please remember, this is a perfect example. It doesn't have to be straight on this level. We got two more above it. However, the wave 5 might end anywhere between 1.0470 or 1.0623. Okay, so that's the thing with the wave 1. However, the length of the wave 5, sorry. However, the length of the wave 1 indicates that it should be possible to hit at least 1.0608 if the wave 5 is equal to the wave 1. So that's the slight nuances here. If we use the Elliott wave analysis, nevertheless, let me just put my RSI on the screen. There you go. RSI positive, momentum positive, bulls are in control of the market. We should see more upside on the euro dollar. What's going on pound? The same situation, daily time frame chart, and right now we just broke above the extension of 161% extension of the wave A, so that's a very nice target. However, there is no indication that the market wants to go up or down. We just slowly pulling back towards the technical level of 1.2000. This is the technical support, of course. So let me just change this color for green, so there is no confusion. The other support is 1.1965, so there you go. This is the other support. Plenty of supports here. 1.1916, the other support, and the last one in that situation is 1.1890. so this is the wall of the technical support right now, waiting for the best. Nevertheless, the outlook is still positive. The outlook is still to the upside. Why? Because we got this positive momentum, strong momentum. It's 65 almost points. So bulls are in control of the market. We broke with ease with 161% of the Fibonacci extension. So let's see if we hit 2. So that's the other level. 200% is located at 1.2248. The local high was 1.2152. So we need less than 100 pips in order to extend this rally to 200% of the wave A. Very interesting setup, very interesting situation on the British pound. Please notice the technical resistance 1.2161, 1.2187. If this resistance is violated, $200 is the next target. What is going on crude oil? The crude oil is going down like no tomorrow. So what do we have here? The first thing is that ABC to the upside has been done after the wedge breakout to the upside, right? A, B, and C. C was the again the falling wedge. So that gives us a clue about the current situation on the oil market. It's very weak. Main supply zone 19.378, 98.35 didn't actually wasn't tested at all, and then of course we have a breakout to the downside. They tried to save the situation when the low from the end of the September was tested here on the big pin bar. However, it's the nearest technical resistance at 82.7 was hit, and then we have this very nice pattern showing the confirmation of the down move, a little bit to the upside, confirmation to the down move, and today we are making new local lows. 73.60 was the low during my analysis. We almost hit the extremely oversold market conditions on a daily time frame chart, so that's a very interesting thing. However, please notice the fact that the next target for bears is the low from the 2021, located at the December 20th, just before the Christmas. So this level 66.26 is the next target for bears. So ABC to the upside is done, and this big pattern here, this big triangle to the downside, and this rising wedge, and then this small falling wedge is telling us that the impact of the higher prices of oil is now slowly but surely becoming less and less important, and bears are still the main force behind the moves to the downside. So oil this week, bearish outlook. Gold. Well, the gold apparently is kind of in a kind of a different situation, because it looks like we want to retrace even more. So we broke above the trend line finally. Okay, we talked about it already. We broke above the trend line. We retraced almost 38% of the Fibonacci of the last wave down, right? The 38% is seen at 1,789. There is a slight supplies on 1,780, 1,787. It worked. The market pulled pulled back lower, tested the technical support at 1729, and now this is the key technical support, and we are still waiting for one last wave to the upside, targeting 38% of the Fibonacci retracement, $1,807 high from the beginning of the August, or even 50% of the Fibonacci retracement of the last wave down, located at 1,843. So as long as 1,729 technical support holds, the outlook remains bearish, and the daily momentum supports this kind of outlook. So what's going on the S&P 500? The S&P 500 is still not doing much here on this channel. Please notice the fact that we recently had a Thanksgiving holiday, so there wasn't much trading here. However, we are consolidating above 3,921 technical support, and we are waiting for the extension towards 4,110. This is the target for the wave C, and in that situation, wave A measured from the bottom of the wave B will be equal to the wave C, or wave C will be equal to the wave A. It doesn't matter, the same thing. One thing that bulls need to do is to break above this local technical resistance, because of this high from the 15th of the November. 4,041 is the level that needs to be violated here. And last but not least, let's take a look at some cryptos in form of the Bitcoin, and the daily time frame chart of the Bitcoin doesn't actually looks good for bulls, because let me switch to the 4-hour. Maybe that will be much more easy to understand. There you go. We keep trading down. We made new yearly low. This trend line, as you can see, has been used, but right now I don't think we should place it on the screen anymore. The market is trading in very narrow range, occasionally making new lows. No indication of a bullish movement at all on this market on a 4-hour chart, on a daily time frame chart. Big move to the downside overnight. Right now the market is trading below the local below the weekends, let's say weekends low at 16,357. The next target is of course 15,797, and then even the yearly low at 15,477. The outlook on the Bitcoin remains bearish. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.